What would you do if you woke up tomorrow and you couldn't work? Not next year, not someday, tomorrow. Your mortgage payment doesn't pause. Daycare doesn't pause. Groceries do not pause. And if you're like most Canadian families, then your paycheck is the only thing standing between your family and complete financial chaos. Tonight, I'm going to show you exactly what living benefits are and why most Canadian families have dangerous gaps in their coverage right now in 2026, and what it actually costs a real family when those gaps get exposed at the worst possible moment. So stay with me because I'm about to show you in the next few minutes what could be the most important financial conversation that your family has this entire year. Here's the honest picture and where most Canadian families stand in 2026. According to the Canadian Life and Health Insurance Association, over 26 million Canadians have some form of life and health coverage. But here's what the number doesn't tell you. Having some coverage and having the right coverage are two completely different things. And that gap between those two things is where real Canadian families get absolutely devastated when something goes wrong. Most Canadian families assume that they have benefits packaged through work, that they're covered when they're not. The average Canadian employer group benefit plan in Canada covers only a fraction of what Canadian families actually need when a serious illness or injury or death disrupts in the household. And the scariest part is that most Canadian families never find out what their real coverage gap looks like until they're sitting in a hospital room trying to figure out how to pay the mortgage while someone they love is literally fighting for their life. It's not dramatic, but that's the reality that I see in Canadian families across Canada right now. So, what are living benefits? And why does every Canadian family with a mortgage need to understand them right now? Living benefits is an umbrella term that covers four critical types of protection that most Canadian families either don't have enough of, or have never been clearly explained them in plain language. First is critical illness insurance. This pays you tax-free lump sum money if you're diagnosed with a covered illness like cancer, heart attack, or stroke. Not after you're covered, but the moment that you're diagnosed and survive the waiting period, that money lands in your bank account. No restrictions on how to spend it. You pay your mortgage, cover your treatments, take time off work to heal. This is the money that you use however your family needs it most. The second is disability insurance. This replaces a portion of your income if you're unable to work due to illness or injury. According to the Canadian Council of Insurance Regulators, 1 in 3 Canadians will experience a disability lasting longer than 90 days at some point in their working life. 1 in 3. If that happens to you tomorrow, how long could your family survive on one income or no income before the mortgage went into default? The third is long-term care insurance. This covers the cost of care if you become unable to perform basic daily activities due to aging, illness, or cognitive decline. The average cost of private long-term care facilities in Canada in 2026 sits between $4,000 and $8,000 a month, depending on the province. Without coverage, that cost falls entirely on your family. The fourth is life insurance, not the small policy that your employer gives you worth 1 or 2 times your salary. Proper life insurance that actually replaces your income, pays off your mortgage, covers your children's future education costs, and makes sure that your family doesn't have to make the devastating financial decisions on top of the devastating personal ones. So let me show you exactly what living benefit gap looked like in real Canadian families. I was working with a couple in their early 30s. They had a combined income of $112,000, a mortgage of $460,000, one daughter in daycare. They both had employer benefit and they felt completely covered. But they had never looked closely at what those benefits actually included because nothing had gone wrong yet. Then the husband, he was diagnosed. His employer benefits covered some of his treatment costs, just some, but his disability coverage through work only replaced 60% of his income, and only for a maximum of 2 years. His wife had to reduce her hours to manage their daughter and support him through that treatment. Their combined household income dropped from $112,000 to $52,000 almost overnight. The mortgage was $2,400 a month. Daycare was $1,200. And the out-of-pocket medical costs of their employer plan did not cover, added up to over $18,000 in the first 8 months alone. They didn't have critical illness insurance. If they had held a critical illness policy on his life with a $100,000 single tax-free payment, would have covered every out-of-pocket medical cost, kept the mortgage payments current, and given his wife the ability to stay at her full-time hours without the family finances collapsing underneath them during the hardest season of their lives. The premium for that coverage at his age and health before the diagnosis would have been about $87 a month, $87 a month versus $18,000 from out-of-pocket crisis on top of a cancer diagnosis. This is the real cost of the living benefits gap. So let me show you the numbers clearly so you can apply this to your own family right now. The average Canadian family with a mortgage carries between $400,000 and $600,000 in total financial obligations. When you add up the mortgage balance, car loans, lines of credit, and projected living expenses, this is the number that your family would need to survive if your income disappeared tomorrow. Now, here's what proper living benefits coverage actually costs for a healthy Canadian living in their early 30s in 2026. A $500,000 term life insurance policy on one parent runs approximately $35 to $55 a month. A $100,000 critical illness policy runs $75 to $100 a month. A basic disability insurance top-up to cover the gap your employer plan leaves runs approximately $80 to $120 a month. Total combined protection for your family's most critical financial risks is approximately $190 to $275 a month. That is less than most Canadian families spend on subscriptions they don't need to want, and coffee that they don't even think about. And this is the difference between your family surviving a crisis financially intact or spending the next decade recovering from something that should have never have become a financial disaster on top of a personal. I want to be really honest with you for a second because this really matters. Most Canadian families don't have these gaps because they don't care. They have them because nobody ever sat down and showed them the full picture in plain language without ever trying to sell them something in the same breath. You've been doing your best. You have the jobs. You've been showing up for your family every single day. The missing piece is not effort, but it's clarity about what is actually protecting everything you have built and what is quietly exposing right now without you ever knowing it. You deserve to know exactly where your family stands before something goes completely wrong. Not after. Because after it's too late, and the decision that would have changed everything. So here's exactly what I want you to do this week before anything else. Number one, pull up your current employer benefits package and find out exactly what your disability coverage is, for how long, and what the definition of disability actually is in your policy. Most people are shocked by what they find. Second, calculate your family's total monthly obligations: mortgage, car payments, daycare, groceries, utilities, debt payments. That number is your real income replacement target, not just your salary. Third, find out exactly if you have any critical illness coverage anywhere in your current plan. Most employer packages have zero critical illness coverage, and most Canadian families actually have no idea. Fourth, have a real conversation about what happens to your family financially if one income disappears for 6 months, 2 years, or even permanently. That conversation is uncomfortable, but it's the most important financial conversation that your family can have right now. So if anything in this video made you realize, or you're not exactly sure what your family's protected against right now, I want to have one honest conversation with you. It's not a sales call. It's not a pitch. It's just a clarity call where we take a look at your actual coverage together, identify the real gaps, and I show you exactly what your family is exposed to and what it could actually cost to fix it properly. Families who do this call with me tell me that it's the most valuable financial conversation that they've had in years. And it costs absolutely nothing to have it. The link is in the description below. Book your free clarity call today, because the best time to protect your family was before something went wrong. The second best time is right now.